country must dwell. Get your hustle on, ring that wealth bell. From the dirt to the gold, every story's untold. Cash flow, Savannah, where ambition takes hold. Started with $1, stretched it to a mile. Every setback just a set of style.
Welcome to Cash Flow Savannah. Today we have a VIP in the house, probably the #1 fan of the Cash Flow Savannah podcast. I'm pretty sure he's watched every episode multiple times. He's a big fan. We have in the house my favorite person in the world, Don Gates, my husband. He knows a lot about real estate, but the other thing he knows a lot about is cryptocurrency. So Don has a very good understanding of finance. He loves the tax benefits of real estate. He's very good at talking about those. He's probably not going to talk about those today, but Don is really good with finance. He's not an accountant right now, but he used to be. He has the degree and everything, and no one's taken that. But one thing that spurred this call today is that Don has gotten into cryptocurrency in the last several years, and I'll let him talk about that. So back in January, he wanted to go to a crypto conference. And of course, I was going to go. I can't be left home by myself. So I said, well, I'm going to go. But before we went, I thought, well, man, I've been to these conferences and I hate when people are kind of faking it and trying to act like I know everything. I'm an expert in this. And you can kind of tell that they don't know what they're talking about. Well, I talk about crypto every day with Don a little bit, but I don't consider myself an expert. So I was actually quite terrified to go to this conference. So I had a plan. I walked in the door of the conference and I knew anytime someone talked to me, I would be like, don't talk to me. I don't really know much. So I was ready. And sure enough, everyone that talked to me, I said, yeah, I'm Julie. I invest in real estate. I don't actually know much about crypto. I wanted to just tell them right off the bat that I did not know what I was talking about just because I did not want any hard questions. I definitely wasn't there to misrepresent myself. And what I found at this conference, at almost every person I spoke to, I said that to them. I'm in real estate. Don't ask me a thing about crypto. They all had real estate portfolios. Several of them had very large portfolios, and many of them actually asked me to discuss their portfolios with them. One even got me on Zoom at one point to discuss his portfolio. So I have to say, for the listener, if you're not into crypto, it's okay. But a lot of people that invest in multiple asset classes. And I have seen, again, many times where people have real estate and they have crypto, and it's always good to diversify. So what we're going to talk about today is diversification. So Don, welcome to the most amazing podcast in Savannah. How are you?
Thank you. Always a big fan. Watch every episode multiple times.
Right. Such a supporter.
Triple speed.
A little bit of an inside joke there, but
There you go. So I just want to start off, like, tell us a little bit about yourself, about your investing journey. You can start from the beginning with being an accountant. I think that's a pretty interesting story because you've learned a lot since the beginning.
yeah. Interestingly, I wanted to go into finance. My when I was in college, my dream was to go to Wall Street and become a stockbroker. And so I had an advisor in college, and he's like, you finance guys are all the same. You just want to head to Wall Street. And he goes, what you really need to do is be an accountant, learn where these numbers actually come from, and then go get your master's degree in finance. And he goes, you'll be way ahead. And I thought, well, that's actually pretty reasonable. And so I got my degree in accounting and started working for Ernst & Young, which is one of the big accounting firms, and hated it. And so my roommate at the time, he was a pre-med major, and he's like, Gates, you're always so good at science. You just need to become a doctor and go to medical school with me. And I thought, well, I'll take some pre-med courses and see. And so I did. And anyway, that's how I got into medicine. But the finance bug never really left me. But I'll have to tell you this, that learning an accountant is, you do learn where the numbers come from, but it has nothing to do with, I can't say nothing to do with investing, but it does not teach you how to make money investing. It teaches you how to organize your financial life, but doesn't necessarily teach you how to invest. And that was a self-taught journey, especially when we really started investing in real estate. You start learning how to actually make money and what's really important in making money. Everything in finance, you begin to learn rhymes. Everything is related. So if you're looking at a rate of return, it doesn't matter whether it's in real estate, whether it's in, crypto, whether you're doing currency swaps, whatever it may be, it all rhymes. And so that's the beautiful thing. You may be in real estate and think, oh man, I know nothing about this. But if you're successfully investing in real estate, you actually have a very good foundation. You just have to broaden that knowledge base and apply it to other asset classes, but you'll have a very good base. but that's where I come from, that background. So, but most of this stuff is self-taught with a long-term interest in financial markets and stock markets. I probably invested in my first stock when I wasn't that young, but maybe 16 years old, and we had a dial-up, and I bought this little subscription. You could dial up, and then you would use the number pad to put in your ticker, and you could get real-time quotes from the street. And I thought, man, this is awesome, because otherwise you had to go to the library. You'd pull out the newspaper and the Wall Street Journal, and you'd look up your ticker and see what it did over the last 24 hours. So that was the original world where I came from. But that was a lot of fun. I made a little money, went up. My dad said, well, I'll just start investing with you. And this was back in the financial crisis when real estate markets and everything went down. So I made some money making, investing in banks. And of course, like all beginners, that changed and it blew up on me and I lost most of my money. But there for a little while, I thought I was a genius. But anyway, that's where I come from.
Well, and Don, talk just a little bit about your favorite tax deductions, because real estate is a really well, protected class for tax deductions. Just give a brief overview, because that's been with us both investing in real estate. That's been your specialty, is making sure that we're maximizing on those tax deductions. Talk about that a little bit before we go into crypto.
Not prepared to talk on this subject today, so that's off topic. It's no secret, and you can go to a bazillion different accountants, and it's just law. Look up the law, and today you have a powerful tool, and it's called AI, and you need to become very comfortable with that, learn how to ask the right questions, run it through multiple different models, but you'll find very quickly that there's only so many things that can be deducted and in a certain way. That's it. It's just law. The biggest thing that I taught myself over the years is just crack a book and go to the code and look it up. So see if it applies to your certain situation. And if, a lot of people are familiar with Amanda Hahn and a couple of the people on Bigger Pockets, and it's like they all talk about the same deductions, and it's not because they're geniuses, it's because it's law. It's just written down. So look it up. Don't be lazy. Look it up and see if it can apply to your situation. That's all I do. I'm willing to look it up, and that's really helped a lot.
That's so true, because we'll get to crypto now, but I'm trying to get people into crypto right now because I understand it, and I cracked a book, and I can't get any of my friends or anybody just to crack a book. I'm like, hey, read this. It's short too. They just will not, and I'm just like, dang, I understand why people just don't understand some things, because they're not willing to just put a few hours in. It drives me crazy.
But listening to this is education. Coming to the meetup is education. That's part of it too, but a lot of times this leads you to questions, and then you need to go crack that book to answer the questions.
Curiosity.
Yeah.
Be curious. All right.
Yeah,
So
there's a meme. It's amazing how many people just don't really care, but they want the results. They aren't willing to put in the effort. I mean, this applies. I mean, I competed as a bodybuilder when I was younger, and it was the same thing. Man, I wish I had a body like yours. And it's like, well, you can. Just be willing to spend a lot of time in the gym and really be strict on your diet. I don't want to do that. Well, then, okay. It's like, then, be careful what you wish for, because you can have it. It's just, it costs you. But, that's neither here nor there. We're not here to chastise people, but it is true. There's this meme. It's like, oh man, you're so lucky because you invested in XYZ, and you're thinking, man, I'm so lucky. I think about the sleepless nights, the sweats, the time that the volatility, it goes up and down. The time, you think, man, I just lost half my money, and it's like luck. It's like, dude, I kind of earned this, luck was certainly there. Anyway, it's that mentality. Is everybody wants the result, and me too. I want the result as well. But as we learn, as we go through life, and as you're learning with your friends there in Chandler, it's like nobody's really willing to put in the effort. Now, some people get lucky. I'll give them that, and they just get lucky, but that's not the rule. Some people win the lottery. It's just never been me.
So tell us what in the world crypto is. I know there's so many different ways you can explain crypto. Explain it in your terms.
Sure. Crypto is just digital assets. That's all it is. So you can say a house is a physical property in which people can live in, and there's multiple different definitions and uses for physical structures, and crypto is just a digital asset. Anything that is represented in what we call traditional finance, stocks, options, value in a company, is all represented on the blockchain, which is what crypto is. It's built on a blockchain, which is just a cryptographically secured ledger of what that asset is. But that's all it is. You're investing in a digital asset. So people go, well, I'm not really comfortable with digital assets. And it's like, really? Do you use a credit card? Do you use Venmo? And it's like, you're using digital transfers of value every day. And this is the same thing. It's just cryptographically secured. And traditional finance is adopting that at a rapid rate now. And it's just a different rail and a more secure rail. We'll get more into that, but that's the technical aspects of it. But just think it's a digital asset. You want to represent gold, you can buy an ETF and somebody else holds that gold, or you can buy token, which is kind of a small piece, but it's a representation of a digital asset. It's a percentage of a digital asset, and you can get your gold that way. Or you can go down and buy physical gold and put it in your safe. And so there's a lot of different ways to get what we just call exposure to an asset, so that you can get that value that accrues to that asset. So there's easy ways to do it. There's more difficult ways to do it, but that's all we're after. We can buy a house. And why do we buy a house? Well, I want the cash flow and I want the appreciation from it, so that I can capture that value as it appreciates in value. That's why we do all of this stuff. It's not like we're collectors and we think this house is more beautiful than the other house. No, we're all in here for value capture.
And one thing we try to talk about a lot with real estate, and it really applies to every asset class, which is that the most money is made in the early adoption. Okay. The stuff that I bought 10 years ago was very cheap compared to today's prices. And that's part of why I bought it 10 years ago, because I knew that in 2025 it would be more valuable. So I'd like to know, because crypto is the same exact concept as real estate. It's the early adopters have made money. The people that bought Bitcoin for 12 cents a coin and it's now worth 117,000, like obviously they're early adopters. But I feel, my gut, I'm not a crypto expert like you, Don, but I feel that we are still at the beginning of the cycle in cryptocurrency, which I think is a reason to speak about it today. What are your thoughts on it? Do you feel like we're still in that phase where you can be an early adopter? Because I don't think it's widely accepted yet. I think it's coming, but I do think we're still in that early adoption phase.
Well, when you look at any technology, including the internet or, cellular phones or whatever, classic way to represent it is what they call an S curve. So for years, it's kind of flat and nobody's adopting it. And then all of a sudden it hits an inflection point and then it goes exponential. And then as the majority of people begin to adopt it and use it, it begins to flatten back out again. So it's that classic S curve. It goes up and then whatever. So we're reaching the inflection point now. We're not at the very beginning. So it's a law of numbers. So when you look at, and it's just mathematics, when you look at if you could acquire Bitcoin at 10 cents, obviously it doesn't take much of an adoption to get a huge rate of return there. But now we're using a baseball analogy. We're probably in the third inning, but we still have a lot of baseball to play. People are becoming aware of it, but most people don't hold that asset yet. It's starting to be incorporated, like I said, into traditional finance where there's ETFs. It's going to be starting and been approved to be incorporated in 401ks, right? So the big boys are what you're saying. They're front running it. So you get a BlackRock or you get these big guys, Fidelity, etc., and they're pre-positioning because they know retail is coming and they're going to get the rate of return based on that. And so I'll use a real estate analogy. You have to kind of see the potential of it and what the tailwinds are. So when you know that Savannah is growing and this neighborhood is gentrifying, and you see an old rundown house with good bones, most people will walk right by it and go, but it's a piece of crap. This neighborhood still has issues, blah, 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 blah. And you go, oh, but if I think about 10 years from now or 5 years from now, this is going to be a valuable piece of real estate. So you buy it, you rehab the house, you get in at a good value. And then 10 years later, people are like, oh, you're so lucky. And it's like, well, I had a little bit of vision. I could see around the corner a little bit. And I took a gamble on it. There was no guarantee. So this is the same kind of thing. When you see asset like this, that ask yourself this question. Now, this isn't original to me, but it's one of the things that convinced me is, in 10 years, do you think the world is going to be more digital or less digital? how about 5 years? And the answer is it's all going digital. Well, why would people use blockchain? It's all about cost. And when you're dealing with finance, if you can get rid of the middleman, you chop out tons of cost. And so as people begin to look at this and going, you mean I could have direct payments? I could create my own payment rails. I don't have to pay Visa, MasterCard for the use of their. And it's like, no. And it's like to retailers like Walmart or Amazon, big money. And so this is what's driving the adoption. Going to be ease of use. It's going to be huge cost savings. It's going to be, but it's always the dollar when you start thinking about it that way. So if you can position yourself, and if you're just new, you just go for the big assets, the ones that are obvious, and one of the obvious ones, of course, is like Bitcoin, right? It's a blue chip, and the tailwinds to Bitcoin, the macroeconomic tailwinds to Bitcoin are massive. And you can go down that rabbit hole, and there is a lot. The deeper you go, the more you see why it's being adopted. And anyway, that's a good 10,000 foot view.
It's so funny. You can talk forever and ever once you start learning about this stuff and you want to start teaching it. It is tough I ignored it for probably since 2020, 2021. It does. And I'll tell you, crypto, it takes a little bit to learn. It takes maybe more than one book to crack open. You have to crack open. It took me probably a couple years to really understand it. And I was like, oh, it's pretty simple, to be honest with you. It's a new form of money, and kind of like money uses ledgers, like ledger. Back in the day, they used a ledger. This is just a faster ledger with no fees connected to it. It's just a faster version of everything else. But yeah, it's easy I know people listening. I'm trying to help people listening right now. Listen to what Don is saying, but go look it up. Okay, what's a ledger? And then you're going to have to go look up, like, all right, this is what ledgers are used for. Blockchain is the ledger. You hear Don saying blockchain. What's a blockchain? Everybody gets so complicated with blockchain, but it's just a ledger. If you don't know what a ledger is, go look up what a ledger is. But yeah. So one thing I want to get into is the big thing when I'm looking it up, you'll have Bitcoin maxis, basically Bitcoin only, everything else crypto is a scam. And then you have a lot of people that are like, crypto's great. What's your advice on that? How do people navigate that? Because that was one thing I had to kind of navigate. It was like, dang, like what?
Okay.
Everybody thinks like there's a pump and dump, like where they just take advantage of you. What's your advice on that and how to be careful with it?
What you said, all of it's true. Okay. So there's scams, there's good value as well. So I'm going to first cover the whole kind of thing. It's blockchain. I probably shouldn't have mentioned it because it scares people off, because of when you say I need a place to store my money and pay bills and whatever, you don't talk about how the bank does the accounting and secures your money and all that kind of stuff. You just say, you just go down here, set up an account, and we'll take care of all of that. Okay. So if you really want to learn, learn what blockchain is, learn the cryptographic proof. That's what, Chandler, I, and us nerds that really want to know what's going on behind it do it, but you don't need to know that to invest. So first, let's kind of just set the table a little bit and say we're dealing with assets here and compare and contrast. So a crypto asset is very liquid. I can go on right now, sell it, and have money in my bank account immediately. And my bank account in this particular case would be a broker. And there's other aspects to that, but we don't need to know that. But just kind of think it goes straight to my bank account and transfer that out and buy whatever I need to with money, what we call fiat, right? So very liquid. Real estate is illiquid. You try to sell a house, you got to go through your lawyers, you got to go through closing, you got to do this. And so you can't turn a house into money very quickly. I can take a digital asset and turn it into money very quickly. Digital assets can be fractionalized. I can break them up into an infinite amount of pieces and sell just a piece of it because I say, well, I really like my house, but I'm only going to sell the back porch. You can't do that. So you just say, but I really like this asset and it's a great spot. I love this house. I don't really want to I got to pay my bills. I got to put my kids through college. So you got to sell the whole house. In this particular instance, if I have a digital asset, like let's just say Bitcoin, and I need liquidity, I need money, I can just sell a part of it and I can still keep exposure to whatever trend that I want to be exposed to. So liquidity is a huge aspect of it, right? Okay. A house is physical and tangible. We feel good about it. These are digital and it's just represented on my screen, but it doesn't make it any less real. real. Okay. But in a house, it's physical. The thing about digital assets, it's new. And that's another thing that makes people uncomfortable. You go, I've just never really used it a whole lot. But houses, they've been around since there were people, right? And so it's something that has very established law. We know how it works. We're comfortable in it. Our parents bought it. And so it's been around forever, got established law. Crypto is new. It has a more volatile legal environment. A lot of that's being settled with this current administration. That's a difference to it as well. The other thing is it's more complex, right? Digital assets are a little bit more complex to the uninitiated. You got to learn a little bit. You got to crack the books. House, you just kind of know. I mean, you've mowed the lawn since you were a kid. You know what the upkeep typically is. You've been paying attention. So houses are more intuitive. Digital assets aren't. It will become intuitive, but you kind of have to learn that. There's some basic distinctions there in between it. A house has a carrying cost. My digital asset doesn't, right? So physical assets have carrying costs. If I have gold and I have a fair amount of gold and I'm worried about I have to pay somebody to put it and guard it for me. I put it in a safe deposit box or whatever. And so it has a carrying cost. A house, you have maintenance, regular maintenance, paint, etc., property taxes, etc. Physical properties have carrying costs. I don't have those with digital assets. So my carrying cost is essentially zero, which is a big difference, right? So those are some of the big basic assets, distinction between assets. So if I'm new to real estate or if I'm new to digital assets, the first thing I don't tell people, and I'm sure Julie doesn't tell people, is, well, this is kind of a complex arrangement to buy, and we're going to have multiple different sellers. We're going to split this out. And of course, I'm speaking of some of Julie would be the expert in this and setting up sales agreements. You don't lead people into complex situations as a first-time buyer, and you wouldn't do it with real estate, and you're not going to do it with digital assets. You're going to go straight for the blue chips. And let's just bring this to equities. It's like if you're trying to buy stock, there's a lot of different companies out there. Which one do you buy? And the answer is the first one you buy is, well, you can buy something that you're really familiar with, which is everybody knows Amazon, good company, right? Okay. Well, maybe I'll buy some Amazon. But, what if Amazon doesn't do too good and has a bad quarter and their stock goes down a little bit? Then I'm hosed. Well, I want broader exposure. Well, I'll just buy an ETF. Okay. Well, that's very simple. And then you have broad exposure to the market, right? And those are the kind of the assets that you would put a first-time buyer in. And so it's like, if you're a first-time buyer to digital assets, to crypto, Bitcoin, Ethereum, Solana, the big boys, then you can understand and start digging a little deeper. There's this famous investor called Stan Druckenmiller, and he had this old adage, which was, if I heard about a good opportunity, first thing I did is I bought some. And he goes, just buying some focuses the brain. And then I would go in and go look and learn about it. And if I still thought it was a good opportunity, I'd buy more. But if at that point I thought, I don't know, I'm not so sure about this one, he'd just sell it. But that's kind of the interesting thing. It's like, if you're really interested in digital assets, go buy some. Go buy some, and you're going to learn a lot more about it. You don't have to sink a ton in, but that's one of the biggest things, is just get exposure and you'll start learning, but stick with the blue chips to begin with. Because the biggest thing retail starts to do when they first go in, they start going after the junk. It's like, oh, look, there's something, and I kind of hesitate to say it on the show, but there's something called a fart coin. Well, it's had tremendous rates of return, but it's absolutely worthless, right? Okay. So people will go, look, it's just a fraction of a cent, or it's 10 cents or whatever, and I'm going to go buy some. Well, you're very likely to lose your money. When you go buy some, you're going to become somebody else's, what we call exit liquidity. So it's like, avoid those types of things like plague unless you know what you're doing, right? And that will be more than likely years down the road. So you want to lose your money? You want to turn $1 million into, $10? Yeah, play those kind of games. You want to turn $1 million into $10 million over the year? Stick with Bitcoin, Ethereum, those types of things. That doesn't mean it goes up in a straight line. It doesn't. And that's where doing small investments in the beginning is huge, because you got to know why you're investing in this asset. And that's why the education is so important. It's because these assets, because they're in the early adoption curve, they're volatile, right? Everybody knows what a home is. The volatility is slow. It goes with the macroeconomic environment. The cycles in real estate, 10 years, it's like 6 years to 14 years. It just takes forever to change. And you can see that by sale prices in homes, right? And it's like, Yeah, but that's not the case with digital assets. The thing can go up and down in one day by 20, 30%. Now, the more mature the asset is, like Bitcoin, it doesn't move that quick. But, the most discouraging thing, and this was discouraging to me in the beginning, and Julie, to her credit, said, "Oh, I believe in you. I know what you're doing, and I believe in this asset class as well." But, you put some hard-earned money in it, and you just say, "Hey, you know what? We have 70% of that hard-earned money now." It's like, ouch, ouch, but you just had, if you're investing wisely, you're after the macroeconomic trend. You know where this is headed. It's up and to the right, and you're along for the ride, but there's ups and downs in that ride. And so that's part of why you have to educate yourself, because otherwise you'll get irritated and disappointed in yourself, and you'll sell it at the absolute wrong time. And anyway, that's assets in general. So why would I include this in real estate? It's because of its exponential nature, right? Real estate returns. Why do we invest in real estate? Sure, there's appreciation in it, but it's more linear in nature, right? There's no exponentiality to it. A house doesn't go from being 300,000 to being 3 million overnight. Now it occurs, right? A plant moves in or whatever, or it's just prime real estate. But in general, that's not how real estate appreciates. And it provides constant cash flow. Now, why are we investing in the Bitcoin? Let's just use Bitcoin as an example. Because of the tailwinds, because of its exponential nature, because of how it juices returns. So, and other real estate investors, people have differing opinions on this gentleman, but harnessing the same way is Grant Cardone. And he's combining real estate and crypto, specifically Bitcoin, to juice his returns. So just as an example, let's say we buy a house and I take 10% of that. I don't care what the numbers are, but let's just say it's a $400,000 house. And I'm going to put $40,000 of that money in Bitcoin, right? Just 10%. And let's say Bitcoin goes up by 10%. What does that do to my overall rate of return for that year? Just went up by 1%. That's huge. It's like when you're dealing with an exponential asset, 10% is nothing, right? Nothing. Typical rates of return for Bitcoin. Now, we could go back over the average, but it's not really, we're on a different part of the S curve, right? Okay, where Bitcoin over the last 10 years has averaged over 100% per year as a rate of return. What real estate has done that? Nothing. So we're on a flatter portion of the S curve. And so you go, well, what's the rate of return now? Well, it's averaging 50 to 70% rate of return, right? Okay, that's enormous, and if you use the rule of 72s, you start looking at that and going, man, holy cow. And if that's the CAGR, the compounded annual growth rate, then I'm doubling my money in a year. And the answer is, yeah, you are. And so you can understand why, if you have excess liquidity, and in the beginning, Grant Cardone took his rents, he did this on his own property and Bitcoin. So that's kind of a dollar cost average way of doing it. And then he started saying, this is really extraordinary rates of return. So what I'm going to do, it's like I'm going to put deals together where we're going to raise some money. We're going to use part of that money to buy the real estate, and then part of money just to buy Bitcoin with that. And then we'll go from there. And we can either refinance that money as that property. We can sell that property. We can just sell the Bitcoin in the future. There's multiple different exits there, but he's getting 70% rates of return on his properties that he's put them together with Bitcoin. And that's incredible. I mean, just
IRR,
incredible.
that's internal return that's not true cash on cash. That's internal return.
This isn't cash on cash. This is on the investment, on the cash that they put down. Well, the total amount of the property. So he uses this $235 million property that he bought, distressed property in Miami, and it was worth $335 million. And so he raised the $335 million, took the extra $100 million and bought Bitcoin, and he's averaging 70% return on that $225 million property, which is amazing. So,
well, Don, I want to ask, you've been using the term ETF. Can you just explain that term? And I want to go back to the beginner, we don't want to lose people too much, but like there is a way to get access to digital assets legally, like you were saying, through the stock market. So for example, you helped me put it into my IRA, right? Legally, I have some digital assets in my IRA, but I'm using ETF ETFs. Can you explain what that means and how someone could do it if they're scared of a digital wallet? How can they invest in crypto, using their 401k or their...
Yeah, very good point. There's two digital assets that are available currently, and more are coming, but one of them is for Bitcoin and one is for Ethereum. And ETF just means an exchange traded fund. So it's traded in your brokerage account just like any other stock. And so it'll give you a fractional ownership, a Bitcoin, but that is what they call custodianed or kept by somebody else, right? So the bank, like if you're with Schwab will buy the Bitcoin and then it will custody it with one of the approved custodians that the government has approved, like say Coinbase or somebody like that. An ETF is just a way to do that. So you just say, well, I only have $200. You can go in and buy, 2 shares of ETF. Like IBIT is the one that BlackRock has that represents Bitcoin, and you get a little fraction of that, and it will track Bitcoin's price. And so you can do that straight from your Schwab account, from your Merrill Lynch account, from wherever you can get access to that. And you'll just use the same rails that you've been using to trade stock or whatever. Or you can do it with your IRA, and or your self-directed IRA, you can just purchase that as well. So very good point. And that's a great way to do it. If you're thinking, well, I'm just going to first dip my toe by just using these traditional rails, do so. You'll get the same kind of exposure and return. It just won't be self-custodied, which as the deeper you get into these digital world, you can decide for yourself whether self-custody is important to you or not. But if you just want the exposure and you'd rather have somebody else protect it for you, and you just want to keep your Schwab account or Morgan Stanley account, whatever, that's a great way to do it. A fantastic way to do it. In fact, my mother-in-law is exposed to both Ethereum and Bitcoin through her retirement funds, and she's been very happy with the returns that she's been getting. So it's fantastic.
Julie, that tells people all the time, like, how do I buy Bitcoin? That tells me that we're still very early, that if people still understand how to buy Bitcoin. So that's how I feel about it. I'm like, man, people are still asking me, how do I buy it?
Early adoption. That means buy it now. Buy it before everyone else does, because it's going to be worth way more later.
And ways to buy, just to give people listening, just get Coinbase, you can get Robinhood. I mean, it's pretty simple. It's kind of like just buying a stock on Robinhood.
Chandler, you have an account, I think, but you can buy Bitcoin directly through Robinhood, or you can buy a stock that follows Bitcoin. Like Robinhood, I think is, to my knowledge, is the only one that does both. I shouldn't be really speaking about this, but that's my understanding. So
Robinhood, yeah. I just buy straight Bitcoin. I'm kind of getting towards that self-custody kind of guy. I'm a Bitcoin maxi is what Dom would call me. But yeah, I'm getting pretty deep into it.
You can't go wrong with Bitcoin. Obviously nothing's 100%, but this is about as 100% as it gets. And now we have institutions. First it was just crazy people. We kind of got in when it was starting to get mainstream. Just the crazy mainstreamers were getting involved. And now it's becoming a lot more mainstream, but now it's being adopted by institutions, governments, and what we call sovereigns are starting to adopt it. And once sovereigns get involved, it's a big deal. It's a huge deal. And there's a reason why, again, as you go down the rabbit hole, you understand why sovereigns are getting involved. Currency, debasement of currency, our dollar just isn't worth what it's used to. And it's just math. We've got to print the money. All governments have to print the money to satisfy the promises they've made to their people. And that's aggravated by demographics. We're getting older. There's less income tax. There's fewer younger people supporting the older people. And that's just getting worse with time. And so when you start looking at these graphs and looking at the math, you see that the only way out is either defaulting, which most governments don't want to do, or just printing more money. And that comes as the secret tax, where they just print more money. And you can think about it in simple math. If a dollar used to buy a Coke and I double the supply of dollars, then it's going to take $2 to buy that same Coke. The nice thing about something with a limited supply like Bitcoin, instead of appreciating asset in your life, everybody complains about inflation. Well, wouldn't it be nice to live a life with deflation? And I just jotted down some numbers here real quick, and you can do it in gold and you can do it in Bitcoin, but just to kind of give you the difference in terms of exponentiality. 10 years ago, a house would cost you 260 ounces of gold, right? Today, and this is just, Google search. Today, an average house costs you 136 ounces of gold. So that's a deflationary asset, right? Your life just got cheaper. So you can buy that same house today and leave half your gold in the safe. Beautiful. Now, Bitcoin, and these numbers are real. 10 years ago, it took 1,157 Bitcoin to buy an average house. Today, 3.8. Whoa. That's all I've got to say is, whoa, are you kidding me? So if I'm a real estate investor, right, and these assets, it's like Julie likes to say, it's never too late. The best time to buy a house is today, right? Okay. Best time to buy Bitcoin is today because you can't go back 10 years ago, right? And it's like, I look at this and I go, let's just say 1,200 and for Bitcoin. It's like, had I just put my money in Bitcoin today, I could have bought 300 houses for that same price. And it's like, you can buy one house or you can buy an appreciating exponential asset in 10 years from now, buy 300 houses. Holy cow. How do you beat that? And the answer is, right, you just can't. It's like strap yourself to this rocket and go. Is it going to cause worsening income inequality, right? To those who adopt it are going to be on it. It's like those who adopted the internet early, did they get rich and the rest of the people get left behind? Okay, it is. So it behooves you to look at these assets. Real estate is wonderful. You want some diversification. It's a tangible asset, right? Real estate has made more millionaires in history than any other asset class. So I'm not here to disparage real estate because it's done a lot for our net worth. What I am here to say is it needs to be juiced. It needs to be juiced with this emerging trend. Crypto is one of it, and don't neglect AI is coming too. Now, AI plays are besides like NVIDIA and chips and those types of things, energy plays a little harder to get some exposure to, but AI and these AI agents are going to use crypto to invest your assets, to pay your bills, to do those types of things because it has to be cryptographically verified. But AI is another emerging trend that you need to learn. But crypto is here, is now, and is going to give wonderful rates of return. You invest in that and your buying power just goes up exponentially. Just think about that. In 10 years, I could have had one house or I could have had 300 houses. Holy cow, right? That is, that's all we're aiming for. You think about us real estate investors, you go, how many doors do you have? It should have been, how many Bitcoin do you own? Because you'll be able to buy the whole freaking several city blocks, right? So it just kind of shows you that exponentiality, and it is foolish to ignore it.
One question I'd like you to address, Don, and I believe in appreciating assets. I mean, that's what we're all here to do, right? Real estate is an appreciating asset. It becomes more valuable over time, as does obviously crypto and digital. One thing I can't ever get my head around, and we have argued, not really argued, but we've debated this topic many, many times. One thing I love so much about real estate is the cash flow. And the longer you own it, the more it cash flows. The cash flow doesn't go down, it actually goes up. Your debt goes down and the cash flow goes up, the value goes up. So what is your answer to that? Like, with someone wanting to retire and live off of their assets in the future, I see my real estate as maintaining itself and it would, pay for my bills. But crypto, you're going to have to actually sell the asset to get any cash flow. Do you have any answer for that, or what are your thoughts on this?
And of course, using this 10-year example is not, it's not going to occur in Bitcoin to this degree anymore because it's a lot further down the adoption curve. Mm-hmm. But you're right, which is that's one of the benefits of real estate is one, it provides cash flow. Two, it's a self-paying asset if it's been rented. Three, you can use leverage. So you didn't have to come up with the $250,000 to begin with. You just had to come up with a fraction of that, right? Okay. Now, those are advantages. And to get cash for a loan on a house is a well-established, very oiled pathway. Everybody knows what to do and how to get it. So the ease of purchasing something like that is great. So that's beautiful. And that's what's helped us with our net worth for a long time is that kind of crass to say, but it's like once your houses are rented and people are paying your mortgage for you, they're just stuffing cash in your pocket every month. You can't beat that. That's a beautiful thing, right? Okay. So your net worth is going up by multiple hundreds, even maybe thousands of dollars a month as they pay down your mortgage and you build that equity in there. It's great. It's fantastic. Now let's go back to this depreciating asset or appreciating asset. Now I've got, let's just use 1,000 Bitcoin, right? Okay. And this was 10 years ago. Well, what's the price of Bitcoin today? Right. Okay. And so it's like, well, we'll just say $100,000. And the answer is, yeah. Okay. So now when I look at that, I go, well, I've got $10 million then, right? And the answer is, well, it's $100,000. So, well, it's 10 million. Trying to do the math in my head. So it's like, well, couldn't I have sold some of that Bitcoin along the way to create cash flow? And the answer is, you could have. Okay. Now, and that would have generated it. Or you could have put it in something else and generated a lot more cash flow than what, you could have gotten from a house. So if it's the right asset and you're in it for a sufficient amount of time, you'll have plenty of asset to quote unquote sell off, or you can do different things now that it's a more sophisticated environment. And this is where decentralized finance comes in, but you can do some investing with your Bitcoin that'll give you a yield. You're right that one of the big criticisms of Bitcoin was its terminal value. Appreciates, I get that. It's a digital asset that I can just look at the number go up, but it doesn't, unless I sell it, it doesn't provide me any cash flow, and I need cash flow, right? Okay. Everybody does, right? Nowadays, in today's environment, now that the legal structure is becoming much clearer, I can get cash flow off of that. Now, the downside again to crypto is you only get appreciation on what you got exposure to, what you actually bought, right? There's not the leverage. I can't just take 1/10 of Bitcoin and buy a Bitcoin. Nah, it doesn't work that way. I got to come up with the cash to get one Bitcoin. And so, but the nice thing about Bitcoin is it's infinitely divisible. So I can buy little pieces of it here and there when I have money. Got $10, I can get $10 worth of Bitcoin. I got, $10,000, I can get $10,000 worth of Bitcoin. I got 100 grand, I can get a whole Bitcoin. And so it meets any budget. And so that's what I'm saying is, yes, take advantage of the leverage and the constant growth in your net worth by using and utilizing real estate. It's hard. That's hard to beat. But take some of that cash flow from your real estate and from your regular W-2 job and plug it into Bitcoin. And that way you juice your returns and you sit on it. Now, once you get to the part where you have a significant amount of investable cash, then you can put a lot more in an exponential asset. And the more you've been in that, the years that you've been in it and learned more about it, then you're going to be much wiser and much more sophisticated in choosing assets that potentially outperform. That's down the road. But in the beginning, it's like just buy little pieces of it, start learning it, take advantage of things where it is easier to build net worth without a ton of money, like real estate. You have to have some. You put them both together, you got a winning formula, in my opinion.
And I think it's very hard to live off of cash flow for the first, until you really start paying down those payments. It's very difficult to live on that cash flow. So it's kind of similar in a way. It's like it probably takes 10 or 15 years until you're really like, all right, I can live off this cash flow once everything kind of goes up. I think CapEx kind of starts killing your cash flow and all that other stuff. The same deal, in my opinion. I could be completely wrong, but just from growing up and listening, I think cash flow is kind of the cherry on top. But kind of like what Don says, you can just sell your Bitcoin if you need some cash flow. Because all it is you're taking bit money and then you have to put it into the currency that we use to buy something. And that's just kind of how I see it in simple terms.
And I agree with you in terms of free cash flow. What's nice, and I agree 100% with you, we had some friends who are our age, maybe slightly older, and we were asking them what their retirement was. And they're like, oh, we don't really, have a retirement. We're just going to get some rental houses. And, both Julie and I chuckled and thought, shoot, you never owned any rental houses and you don't live off the cash flow on a rental house because there's just not that much, to your point. The secret sauce in real estate is the monthly increase and net worth that occurs by other people paying your mortgage for you. And so that 10, 15 years down the road, again, to your point, it's like now all of a sudden I've got an asset that's actually worth something that I've got significant amount of equity in. Appreciation a little bit has helped me. And then I can leverage those assets or sell that asset. And all of a sudden I have, some real money, but it takes time. And the same kind of thing with Bitcoin. I mean, there's all kinds of different, you don't stake Bitcoin, which is an interesting term that I won't get into, but there's ways of lending your Bitcoin. And it's a little bit risky to get a yield. And so those things are going. And now we have borrowing against your Bitcoin is now legal. And we have banks that are doing that now. And when you apply for a mortgage, they have to consider your actually Bitcoin and crypto holdings to qualify you for a mortgage. Before they weren't allowed to because the government was anti-crypto. But those kind of things can still be used. And so take an appreciating asset. You go, okay, I have, one Bitcoin is worth $100,000, but I need $10,000 to come up and pay for my house. And they're going to charge you an interest rate on it, right? To make a down payment on my house. So you take 10,000 out and, you come back a year later and now your Bitcoin's worth 130,000. And it's like, I could sell a portion of that $130,000 Bitcoin, still have $120,000 left and pay off my loan. So you can see how borrowing against your Bitcoin can be a very powerful way, harvest cash flow, but at the same time, not really compromise your overall net worth.
And again, just educate yourself. You have to educate yourself. Like it can be a little crazy with it, but that's what I would say. Just keep educating.
Yeah, I don't know if I've really helped people here today, but I guess the overall picture is by getting involved in some of these exponentially growing assets and being wise about it, stick to the what we call the blue chips, the majors, you can really juice your return over time and really augment your net worth. And once that net worth goes up, and if you're just let's say a real estate maxi, you can use that additional net worth because banks are now considering it to leverage it into more real estate. And if you're syndicating or you're putting things together like Grant Cardone, deals together like Grant Cardone, as these assets become more mainstream, it's another way to say, hey, I have this quadruplex and it comes attached to one Bitcoin and this is the deal, and it's like, well, it's kind of interesting, and it's just kind of another way that people aren't really thinking about things that may give you an edge in a market where everybody's trying to hawk the same deal. And it's like all of a sudden you're offering something new with better rates of return. And what's my exit strategy 5 years from now? What's our projections? And all of a sudden you're going, who's doing this in Savannah? Nobody's doing it in Savannah that I know of, but it's interesting. Pretty soon there's going to be copycats to what Grant Cardone is doing. And we call them treasury companies in regular finance where they buy Bitcoin and it really juices. MicroStrategy is kind of the gold standard as far as that goes. He's got an operating business, but he has leveraged it to lots of Bitcoin, and that has really juiced the value of his company. But anyway, I'm just saying something that rhymes with that, like Cardone is doing, and doing it in real estate and doing it on a small level is interesting. And if you're selling to young investors, it might be the thing that seals the deal for you. So anyway, something to think about.
We want to say we are not investment advisors. None of us are professionals. Chandler,
Yeah.
Don, and myself, we're just talking from our own personal experience here. We're here to educate. I can't push the word early adoption enough. And I know early adoption works in real estate because I've been an early adopter on multiple asset classes. And early adoption also works in crypto. Like Don says, finance rhymes. Like a lot of asset classes actually rhyme and have a lot in common. So it's a great learning opportunity.
And if you have questions, okay, you can tell I'm a fanboy of this, but it's like take your AI model and ask questions. And if you want better answers, pay your subscription. It's cheap. People will pay all kinds of stuff for, personal coaching. It's like pay $200 a month and you will get professional grade research and answers to your questions. And it's one of the most powerful educators. And you'll get better at asking it questions. And then you can just sit there and you can talk to it. And my wife and I, we go walking almost every evening. And sometimes we just sit there and we chat with the AI model, and it just answers all kinds of questions. And you can go deep down a rabbit hole, and it broadens your understanding, and it just makes you so much more sophisticated, and so much information is there so quickly. And then if you forget it, ask it again tomorrow. And it's like, it's so easy, and it can teach you so much. But just for instance, like I was just talking there about combining real estate with crypto, you can just say, hey, I need a couple of ideas. This is what I'm thinking about. How could I do this? And it's going to spit it out. And then you go, well, I need more detail and nuance on that particular thing that you said, and it'll spit it out. And then you take its answer and you run it with another model and go, think about this analysis. And do you see any weaknesses or strengths? And what would you add to it to make it a better analysis? And it's just crazy how putting them together like that just gives you something solid. And you think, man, I just learned that much this quickly. And I never even talked to anybody. I didn't go to a lawyer or whatever. I have a friend, he lives in France, married to an Italian lady, and he's setting up trusts, and he's got properties in multiple different countries, businesses in multiple different countries. And so he's got a lot of tax issues and title issues. And he's trying to set up trusts for his kids. And he was telling me today that he has spent hours and hours arguing with AI. And he goes, I learned more in 24 hours than I learned spending weeks with my lawyers just by arguing with AI and getting the setup from AI. And I was like, man, I'm going to be the first in line to get a Neuralink. And he's like 100%. When they become available, I want one too, and it's like, it's a powerful tool. And same thing with real estate. Ask it questions. Yeah. It will teach you like crazy, for lack of a good word.
That's funny. So. Just this weekend, AI won me an argument, actually. I'm in an argument, and my buddy is just such a lawyer. He knows how to just twist it and make it sound right. And he'll start telling everybody, look, I'm right. And sure enough, I pull AI up and I let it just jot everything down. And I just showed him, like, here, check this out. And he read it. And sure enough, I was right. I just couldn't articulate it and make it sound so good. But yeah, AI is it's incredible. I literally just asked exactly what I needed. And it gives you just this long form like equation. And it's just so good.
It's amazing. So I guess let me leave you with this. I know we're kind of been going long in the tooth here, but it's in 2020 is when I really started really taking a look at this. And, with COVID, everything else, you're spending lots of time at home. You're wondering if you're going to have a job tomorrow, those types of things. So I was spending a lot of time learning. But it's start small, ask lots of questions. And the big thing is if you're listening to a podcast, watching YouTube, and they say something, a lot of this stuff is just vocabulary. Like Chandler was saying earlier, blockchain. What the hell is blockchain? Well, ask AI. It will tell you. And it's like, stop and ask the question. So the next time it comes up, you're like, I know what that is. Cryptographic proof. What the hell are they talking about? Ask AI. And as soon as you start learning this vocabulary, it all starts falling together. And I'm telling you, 90% of any endeavor is just vocabulary. Right. And it's like learn the vocabulary and then you kind of know the field and you can start to really understand what they're talking about. And then you can develop mental frameworks for it. But start small, start teaching yourself. And once I started getting into it, then I was like, I wasn't present. It was like, ask your questions like, how do they determine what trends are? How are they coming up with price predictions? How do they know what adoption curves are? Those types of things. And so I found somebody that I trusted and I paid them. Right. So they offer services and you may try several different services, but then you can start to see how they think. And that was very worthwhile to be a member of a group that to trust. Don't just go on X and pick anybody who's shilling whatever and seems to know whatever. They have to be around a long time. And when you've been around a long time and you've been around in market downturns and you're still there, those are the guys you want to listen to, guys or gals that you want to listen to, as somebody who's been in and out of markets for a long time, have a track record. And anyway, I paid for that. And it's just like going to school. It's like they can really advance your knowledge and understanding of the markets and whatever you're interested in, whether it's real estate or whatever. And this is why we go to meetups and, cash flow Savannah, those types of things. It's like we're trying to educate ourselves. We're trying to meet other people. We're trying to listen to people that are smarter, more experienced than us. And nothing's changed when it comes to learning cryptocurrency or just investing. And you're going to want to learn it all because it all rhymes, which is, remember, traditional finance is coming to the digital side. And it's like, you want to learn how they do this. How do they come up with this? How is it that they know about market cycles? How is it that somebody's making money regardless of what the cycle is doing? What is this rotation? How do they figure out? And of course, this is what makes a market, because everybody has a different opinion about exactly where you are. But what indicators are they looking at, right? So we look at housing starts, right? You look at mortgage rates. You want to look at those kind of things. What's new house sales compared to old house sales or established house sales, right? This is how we judge a market. What's our growth rate? Do we have businesses here in Savannah? What's the demographics, right? These are the kind of things that we look at as real estate investors. Same kind of things apply for traditional finance, for digital finance. They're all there, but we have to start learning that. Start small, start educating yourself. Don't give up. The smarter you get, the more excited that you'll get. Then you'll get confident. You'll make a mistake, and then you go, I don't know, crap. And you don't, and I still don't. And the market looks to humble everybody. That doesn't give us an excuse not to learn, to keep getting in there. And there's this old saying, but I'm going to use it, and it's time in the market is more important than timing the market. So it's like, get involved, get exposed. You can't participate unless you're exposed, unless you're in the market. Can't go on the ride unless you're on the bus. So get on the bus.
Yeah, I want to just kind of throw this out there. Bitcoin is at 112,000. I'm hoping Don can come back in just a few years and we'll have this 112,000 Bitcoin. I also want to bring this up, and I thank Don for this as well. I bought Bitcoin when Don introduced me to it, and I am now up 80%.
Wow.
So
Congrats, Chandler. That's great.
powerful this can be. Now, it took me a little bit. It took me a little bit to go all in. I was just kind of in it. And then I kind of, as you get smarter, like you say, as you get smarter, you kind of start to love it. The real big chunk of mine is like 60%, but overall 80%, I'll take it.
Huge, though. I love that. Well, just for our listener, I want to reiterate what Don kind of said, which is like, feel free to lose a little bit of money. Okay. You'll dial in if you put even $100, it might go down to 20. It could, but it could also go up. And that's when you kind of dial in. And I talk to real estate investors all the time, and they want every number imaginable before they buy a house. They want to know exactly how much the rehab is going to be, exactly how much the taxes and the electricity and the driveway power washing or whatever. And I tell them all the time, you're never going to know everything everything, but you're going to learn. The more you get into it and do it, you're going to learn. And crypto's the same concept. Like Don got in, Chandler got in. Chandler, you told me years ago you got into crypto back when you were in the MLB. You had no clue what you were doing.
No, I didn't know.
It
I
still
was,
worked out, but for a minute you looked like an idiot, right? And then it came
yeah,
back.
I bought it. Yeah, it was, I was a retail investor buying the pump and it just took
Right.
forever. I was being a speculator and I didn't know anything. But
But
now
you're still making money today, right? Because it's been long
yeah.
enough.
So I'm such a Bitcoin. It was Ethereum that I bought a long time ago. When it ran that pump to 4,000, I bought it at like 2,800. I was like, God. And then it went to 1,200, and I'm like, I just freak out. Yeah. So finally, it got to 2,800 again. I sold immediately. Just put it straight into Bitcoin. So yeah, I was like, I'm not messing with anything else but Bitcoin.
It's got tremendous tailwinds to it, and you always rotate back into that
Yeah,
firm.
no, I'll start dabbling in some other things, but I like my returns. I really believe in Bitcoin. I'm not against. There's some really good ones. Like I think there are some like Solana and all those. I think they're fantastic. My opinion is be super concentrated in what you're investing in. I'm like 99.8% concentrated. And that's just a concentrated bet I'm willing to take. Some people don't like taking those bets, and I'm willing to take that bet. So
I'll throw another adage out to you, and of course this doesn't apply. I take it with a grain of salt to everything. It's diversification preserves wealth, concentration creates wealth, right? Okay, so Jeff Bezos didn't go out and buy a bunch of stock. He owned one stock, and he tied his entire future to it. So his concentration, and he was 100% committed, obviously paid off in a big way. Now that's assuming that you're making smart bets, and so Solana and I don't know what number 4 is right off the top, but anyway, those top 4 or 5 are going to be good. There's going to be coming ETFs that will create a basket of the top performing ones. And so right now they have some meme coins like Dogecoin would be in the top 10. So you got to take that with a grain of salt, and you got to be a little bit more selective this early in the market. But in a couple of years, there's going to be ETFs that you can just like today, you buy an ETF and you participate in all the Mag 7's earnings and growth. So those are coming too. So if it's just too much for you, just buy an ETF like IBIT or the Ethereum ETF. I forget what that one's called. Anyway, in the future, there'll be a basket of cryptocurrencies so that you can participate in. But once we get down there, you're relatively early. Right now, I think they're estimating that it's only about 400 to 500 million people actually own any crypto, and we've got billions to come. So just think about that. And it's like we still got a lot of growth out there. We are slightly over a $4 trillion market cap. Gold is at 22 trillion worth, and this is the entire. They estimate the entire traditional finance, which is worth hundreds of trillions of dollars, are going to be transferring over to these digital rails. And so you start looking at that and going, holy cow! Bitcoin, which is at say $2.5 trillion, so we'll just say is 1/10 the value of gold, and if Bitcoin is, and then this is what they actually consider it, a store of value. It's digital gold. So let's just assume it assumes the market cap of gold. You can say, well, if it's at 100,000 today, once it gets there, will it take 3 years, 5 years, 10 years? It's going to be worth $1 million a coin, a token, a Bitcoin. So you can see that it's got tons of growth left in there just based on one asset. That's ignoring sovereign adoption and more traditional finance adoption and retail adoption. It's ignoring all of that. It's ignoring the scarcity, just saying once it assumes the same market cap of gold at today's value. Now remember, this takes a couple years, so gold will become a $30 trillion asset, and so Bitcoin will be a $1.5 million asset just based on gold, right? Okay, so you can start to see that the future of this potential asset is astonishing. Now you have to be patient. I get a lot of people that ask me, what should I invest in? I'm like, what's your time horizon? If they're young, I'm like, just buy Bitcoin and come back in 5 years and you'll be very happy you bought it. And it's like, you're just not going to go wrong. You're just not going to go wrong.
5 years ago, Bitcoin was $10,000. That's it. Isn't that crazy?
2 days ago, and it said 10 years ago today, Bitcoin was $323. Okay, $323. So you calculate that rate of return. So it's not going to be that exponential going forward. But if you could get a 10 bagger in 3 years, what do you think about that? And then the answer is, whoa, that's pretty impressive. What if I could get a 10 bagger in 5 years? That's pretty impressive. So it's a great asset, and it will juice your real estate returns. And if you buy it, there's never a guarantee, but I doubt. I had somebody ask me and they said, what should we put our money into? We got some inheritance. And I told them, buy Bitcoin. So they came back and told me all excited, I bought $10,000 worth of Bitcoin. And I'm, oh, okay, which is fine. They had a lot more money than that. And then I saw them the other day and I said, we all make mistakes, blah, blah. I forget what we were talking about. And I said, just kind of like your Bitcoin purchase. I bet you wish you had bought more Bitcoin. This was back when Bitcoin was like $70,000, something like that, $67,000. And she looked at me and was like, come back in 5 years and you're going to love it. That's my spiel for today. So
I want to lead your final comments because you say something which I really appreciate and I think needs to be said more. And I want to say for the listener, Don does a lot with finance. He talks a lot more finance than he does pretty much anything else. And I like when you talk about politics and finance. Can you kind of give us, I love when you talk about this, that politics, people get so worked up about politics and they use that as the reason not to buy assets. Can you give your answer to that, speaking from the big guy's perspective?
I don't know exactly what you're talking about, but the kind of people that I've been associating with, very successful investors, their success doesn't depend on who's in office. It doesn't determine their success. Their success comes from reading the winds and the market cycles, and they just invest to take advantage of that. Easier said than done, but they stress a whole lot about who's going to go in there. They just want to know how it's going to affect their money, and then they position to take advantage of that. Doesn't mean they don't have political views, but they're more interested in what's going to happen to their money. So obviously, politics affects policy, which affects investments. They don't get all worked up about it. They just say, well, how does that change the environment? Where do I need to position? And so that's the take-home message, which is don't get all worked up about whatever. Yes, things will change. Yes, whatever. And you may have opinions on that, and that's fine, but it has little to do with your money. Read the tea leaves and invest them appropriately. And it's interesting when you go to these financial conferences, and even like this Bitcoin conference that we went to in Miami, people all have political views, but they really don't talk about them. They really just want to know what's going on in the market. How are things changing? Where are we predicting? What time frames are we talking about? And where do I put my money? And that's the beautiful unifying thing about finances. There's not red or blue. It's green. And that's what we want to know. And so it's everybody, regardless of what their political beliefs are, want to make money. And so that's really unifying, and it's very humanizing, and it's unifying more than it is dividing people. And that's what I like. I hate politics because it just divides us, and it irritates the heck out of me. We're all Americans, by and large, want 80 to 90% of the same things. And it's like we need to concentrate on what unifies us. And that's a little bit of a political spiel there, but it's if you're really interested in making money, just figure out how the winds are blowing and position appropriately. That's what determines your wealth, not who's in office.
Agreed. Pick an asset class, educate yourself, buy appropriately. Don't stress about the little things that change from day to day or who's in office in the White House. The big guys make money no matter who's in office. And I've always known whatever happens, it's going to be okay. I'm going to figure it out. We have to pivot with our investments. And there is no way that's just going to work every day, all day, 24/7 and go up, up, up and to the right. Okay. Like things are going to go up and down. Your assets are going to be worth more and then less and then more, but you want that general curve up and to the right. So Don, thank you so much for coming on. I really appreciate your time. It was not easy to convince you to do this. I know this is a little bit outside your wheelhouse, but I also know how much you enjoy speaking about finance. So just thank you so much for coming. It really means a lot. And I truly hope our audience enjoyed it.
It's my pleasure. And I hope at least somebody found it useful. I know we kind of get a little excited about it, but hopefully somebody found it useful. And thank you for the invite.
Absolutely. Anyone that knows me knows I love to learn. And I've learned quite a bit today. And I hope our listener has as well. So if you've enjoyed this, please comment. Please let us know. Do you want to see Don at the next Cash Flow Savannah meetup so you can pick his brain? He could be there. He has come. Maybe
Some
not every
people
month.
do win the lottery.
Yes, if you win the lottery, he will come. But Don is a local real estate investor here in Savannah. He knows a lot about real estate. But tonight we did ask him specifically to speak about crypto. But we really thank you for coming on. It means a lot. We just appreciate you supporting this community, and we're proud of what we're doing here. So thank you for joining the podcast. We hope you'll tune in every single week. Chandler and I are working very hard to keep these discussions high level. I understand sometimes these things get a little probably outside your comfort zone, and Don might have spoken about a few things you don't know, but he also gave you the tools to go look it up. So we encourage you to keep educating yourself, keep investing, keep bettering yourself and your family. And we really look forward to seeing you on the next episode. Have a good one.
Fields of green, seeds of sweat I sow. Running numbers, watch the cash trees grow. flow, Savannah, where the dreamers dwell. Get your hustle on, ring that wealth bell. From the dirt to the gold, every story's untold. Cash